day all. Ira Epstein with the crazy hair. I need a haircut so bad. And this is your financial market wrap up, and this is for Tuesday, the 23rd of June 2020, about 5:55 p.m. Central Time. What an evening. I mean, if you were up late, I'll define 10:30 or so as late, you saw the stock market crater. And as fast as it cratered, it came back. And that all had to do with White House trade advisor Navarro making an answer on Fox TV that wasn't the best. And what I mean by that, he was asked a lengthy question. If you watched the interview, and I had a chance to look at the excerpts of it and so on, the way he answered it made it sound as though the U.S.-Chinese trade deal had ended. That's a big deal. And he and Lighthizer are the two big boys in that, along with Steve Mnuchin, of course, and Wilbur Ross. You know, those are the four kingpins, as I see it, of this. When he said that, I'm sure the market went, wow. He did his very best to correct it later by saying what he meant to say was the U.S. no longer trusts China after the COVID-19. They knew about it. They didn't tell the world about it, and things got out of hand. I get it. But the cat's out of the bag. So China, of course, sees that too. The president, of course, saw it. I saw the Chinese press. They go, Navarro, no, he's got loose lips. He says anything that's in his mind. They're not well thought out. I'm giving you the gist of what they said. It was actually nastier than what I just said. And the good news is maybe China keeps it up. The bad news for the U.S., we now know that if there is no trade deal, we saw the stock market let go. What if it hadn't been rescued by the president putting out a tweet? No, the trade deal is alive and well, and he corrected that. Okay. On the energy market, I'm a little disappointed right now. And the reason I'm disappointed at this particular moment, we had nearly a 4.5 million net draw in the products, the crude itself, and the distillates and gasoline, and you're not getting a bump on that. EIA is only looking for about 1 million barrels. So if they get what they're looking for in the EIA, I think the market's saying that's not so friendly. So something to think of there. As for the stock market, well, we start off in the evenings, we get corrections, and then by the end of the day, what can I tell you? The market decides that all news, bearish, bullish, is bullish news. We saw that in 2009, and we saw it after 2015. These things come until the top is in place, it's not in place. If you're going to play with it, trying to catch the swings back and forth, nothing wrong with that. Have very tight stops. So, we take a look at the S&P 500 index, and dare I say for the week, we're only 2 days in, actually two and a tenth or so, we just opened, we're down 46.7 points so far. Okay, I find it interesting that suddenly we're not making and breaking these prior highs, but that's all I can say. I have pointed out to you each time that the key is this right here. Because you've got that higher high. If you get a close under 29.82, the bears will take a look at this and they're going to say, suddenly we have lower highs, lower lows. The support's 28.68, but they'll say that. You haven't had that since March. You've had consistent on corrections, higher lows on a closing basis. Do you see that? So I've given you a number, and that's all that it is. I'm giving you a number. When I look at the chart, I see sideways action and no more than that. I see a market caught by this area up here, just over 3,200 and support over 29. And I see a market whipping back and forth in there. I see no trend in day-to-day basis. I see a lower low. And today we made a higher high. That is not the definition of a trend. A trend up has higher lows, higher highs. A downtrend has lower highs, lower lows. And then you add filters to it. The filters that I look at are the 18-day average of closes. And from my point of view, you're in a battleground, and you've been at that battleground now going back 1, 2, 3, 4, 5, 6, 7, about 10 days almost, that you're just battling to see which way's this market going to go. If it drops down and doesn't hold the 18-day average, the 200-day average at 13.5, that's the support level. On the way up, if the market goes up, the resistance is 32.18. You're in the middle of no man's land right here. When we take a look at momentum, you're getting no edge from that. It's just flat as can be. So coming in, I think the bears were trying the short side of the market. I think their stops would have been over that high, and I don't think they went anywhere with it. They didn't get hurt a lot, but the market's not giving them much action. The only market that keeps going up for the higher highs is the Nasdaq. Why? We know it. We don't have to keep saying it. We know it's the Amazons. We know it's the tech stocks. Come on, I get tired of hearing it, but that's what it is. We know that. And we know that another round of COVID, wherever it takes place, Florida, Arizona, those people go to shut-ins, they turn on their computers, their TVs, they're using those elements. We know that, and that's what's working. I'm very concerned that the stores aren't filling up. People are sort of used to and comfortable right now using the Amazons and the like. They still don't want social contact. I saw today on CNBC, I think it was, the head of the National Restaurant Association talking about restaurants are not filling in areas. They don't like that. Lunch times aren't filling. There's still no comfort. You can't operate profitably with 20, 30% capacity when you got 100, and that means 70 to 80% unused. Remember that. So problems still there, and that's a big chunk of the people that work in the U.S., a lot of them in the service industry. We still have lower highs and lower lows in the Dow. Of all the indices, to my surprise, this is still the one showing the bearishness. I would have thought it was the Russell. The Russell made itself a higher high today and knocked out its pattern. So if you had asked me to make a bet, I'd have been wrong, in the sense that I thought this would be number 2 in weakness and number 1 would be the Russell, and it didn't work that way. But this is still the bear. If it drops down, the support's in the 24,804 to 24,678 level. If the market gets up and decides to clear this high right here, which is 26,320, well, then what happens is you've negated the downtrend, okay? That would not start an uptrend on the current pattern that this market has like this. What else are we seeing? We should review this all the way. Just like the other indices, you're caught in no man's land against the 18-day average, and again, momentum's not giving us anything. As I said, I was surprised today that you got high enough up in the Russell to take that out. Did it start a trend? Absolutely not. You have a lower low and a higher high in just like the other indices. As much as the Nasdaq has captured the noise of the day, these are all sideways action. They are not the Nasdaq. They are not moving like the Nasdaq. They're just going flat right here. I don't know if there'll be a rotation if the Nasdaq breaks back into them. I can't tell you that. I can tell you I'm not seeing anything other than the Dow still in a downtrend. When we come to the cash VIX, the market is back down to the combination of the Bollinger Band, of the 18-day average and the 100. So we're at 28.19. That's where these two numbers are. The settlement today, 28.19, which is still over the 18-day average. Momentum pointing down. We've had the correction. If you were to fall to 22.63, I'm going to be a broken record. That's where I think the pros would step in and write puts, trying to get back up to this 2,800 level. In the bond market, the bond market has a pattern of lower highs. Got that? You can argue a lower low too from there, but it's over the 18-day average. Nothing to do with that. Very overbought, not throwing out any signals. The 10-year note. Remember what I said? You're just in the middle of winding and going nowhere, and that's what I've been saying, I think, for days on end now. I still believe that. There's no trend there. I know you're going to say, Ira, why? You're showing higher highs, higher lows. I am. But I'm also showing you an overbought market. Tonight, the market is trying to put both numbers over 80. They were not that way on Monday. So on Tuesday's close, remember we're reviewing for Tuesday, but we've already got Wednesday prices. Both numbers were over 80, and they might stay that way through today, but they still got to make it through tomorrow. I'll worry about it tomorrow. I'm just not seeing any edge there to trade off of. Dollar index dropped enough today to break this prior low. Now, I had been talking since you lost the embedded reading right here that I thought prices were going to go to the 18-day average of closes. That's where they often go when you lose that reading, and that would be about it. Well, it turned out to be about it. Now you're out of a trend. You have a higher high and a lower low, so I don't see anything there of super interest. In the euro, I was surprised we didn't get up higher than this. Today's high was 137.10. If we take and look at this high, it's 137.75. So even though you rallied here, you didn't do what I wanted in taking that out and be the mirror of the dollar, negating the trend. Maybe it's going to pull back into the 18-day average, develop something else. It's been staying over that number. The bias is up, so it's not bearish anyways. It hit its objective and it turned away from it. In the yen, whoa. Embedded readings yet. This market's still bullish. This takes over the whole chart from the swing line when you get an embedded reading. So until the red line falls under 80, I say this market is going to be supported on breaks as traders look to see can they goose it up to the upper Bollinger Band. Lose that reading, and then I look for a retracement right back to these two numbers, the combination of the 18-day average and the 100-day average of closes. Bulls took control of this market. September Bitcoin, it's time for you to be moving on from your Junes. Trend is still up. Market's trying to pull back here, but you're sideways. You know, overall, it's a sideways market right now. Let it tell us what it's going to do. The boundary's 10,125. First support, 97.50. WTI and Brent. Okay. So the differential has been coming down back to the 18-day average of closes, so nobody has a bias for all purposes right now. As you got up to the upper Bollinger Band, you hit it today. What is my rule the first time you hit a Bollinger Band? That you take money off the table. Now, how much money, what I mean by money is how much of your position do you take off if you're long? Well, I'll leave that to you, but you don't want to give back too much, but should you take money off the table? I believe in that. Support, pullbacks here, overbought. I think the pros are going to not be following this to the upside as much as you think. Did the same thing in the WTI. And be careful if you lose that momentum and it starts turning down. So I see an uptrend that has hit targets, and I think the pros are cashing out of it. Gasoline did the same thing. You got up for the first time. You haven't been back there since the beginning of June. So here we are in a market that's about 3 weeks later, got up there. The 4th of July is right around the corner. Markets anticipate the 4th, and then they discount it when you're in it. Remember that. That's buy the rumor, sell the fact. Nat gas still looks bearish to me. You got the fully embedded reading. This market's under the pressure. This is the August, and it is down, just a half a point tonight. They tried to goose this market. It could certainly be headed towards that 164.40 zone. So, I know that many of you like the futures, you watch it, but you also trade the spiders and the ETFs. Well, over the past 2.5 months, I have been building my spider ETF video to match your expectations. We started at 27 charts. We're now up to 35 for the subscribers. I added SMH today for them. There's 5 more that'll come. One of them I know will be BETZ, the sports betting. But I covered the 35 charts. The charts look like this, and they work just the way my futures do, the morning subscriber. Technical analysis, the fundamentals. So in the afternoon, what I do is I prep them for the morning reports. If there's an API, I give them like I just did tonight for them. The API report is already in that. And then I give them their points of entry, risk, and what I think are the in and out trades for them. Now, in and out could be a trade that lasts weeks. It could be one that lasts several days. If I'm wrong, it could be an hour. It could be 5 minutes. This is now what we're covering. So we keep adding to it. And, I'd like you to stall this if you want to look at them all. Don't say it went too fast. All you got to do is hit your stall button. But Like I say, we've added another category with jets, XLU, SMH. We keep adding to the energies. The metal markets, we've added more miners to it. In Canada, we did that. Emerging markets, we've added. The spiders are the spiders, but you can see there's a lot there. It takes about 15 to 20 minutes to get through it. If you watch it on our website as a subscriber, we do it in a way that there's a scroll bar at the bottom, and as you go through it, it'll tell you what section you're in, so it makes it easy. The introductory price, very inexpensive, and as you all know, I've now created a combo because it's so important that when you're looking at a spider in the afternoon, you do realize the market closes in the spider and ETFs at 3. The futures markets, though, in a lot of those areas, X the spiders, look at the futures for their direction, and that I cover at 5:40 in the morning. So some of you have asked that you want a combo package. Done deal. We made a combo with a discounted price. There's more information about this on our website. Go at www.iraepstein.com. Go to the research area. It explains everything. All you got to do is look at the morning subscriber video or the other, and away you go. Thanks for watching. I'm Ira. I'll see you tomorrow.